Hello everyone, welcome to the ichimokocharts.com daily analysis for the SP 500 for Thursday, May the 13th, 2010. Well, a continuation of the trend to the upside. Today's candle has still actually made a higher high and a higher low. So the trend remains in force. Unfortunately for the bulls, the short-term dynamics don't support this trend to the upside, and there is danger of this trend ending. We have a red-bodied candle, which means that the sellers have made some net bearish progress on the day between the open and the close, and they've made a fairly large amount because the size of the body of the candle is fairly large. The market has also closed down towards the low, which means that the sellers were keen. The sellers closed the market in control, and they showed some commitment to force the market lower throughout the trading day and close the market down there towards the low. So a very real danger of this market correcting. Now the market also closed or attempted to trade up above the top of the cloud and failed to close up above there, so that could be significant for this market. It could be the beginning of another sell-off. And the market actually found resistance at this 1169 region, or just around there, having only just taken out the previous high and then selling off from around that region. The market opened up around that region, around the 1169, just traded up above there and traded down. It actually closed down below the 1163 region and closed within the cloud to give us a neutral market overall once again. So we've got a market that's oscillating above and into the cloud at the moment. So quite an indecisive market, even though the trend is up. Now the market is still trading up above the Kijun-sen and Tenkan-sen, which means that it has an overall positive bias. But we haven't had that crossover of the Tenkan-sen back up above the Kijun-sen. So in that regard, the market is still negative. Short-term and long-term trend or bias is remaining bullish. Now the Kijun-sen remains flat, and while that Kijun-sen remains flat, there is a chance that the price action will retrace back towards there. So that's flat, so we do need to watch the low of the current candle for the potential for the market to retrace back towards the Kijun-sen, which is at 1142. And if the market does do that, then that has potential to offer support for the market. Interestingly as well, the Tenkan-sen is still pointing down, and that's reflecting some downside momentum that the market created today, and it's reacted quite quickly to that downside momentum, so that could be significant for this market. In candlestick charting terms, this is actually a reversal pattern or a potential reversal pattern, a bearish reversal pattern, and it's a Harami reversal pattern, and that's where we have the body of today's candle is engulfed by the body of the previous day's candle, and we have a bearish candle today and a bullish candle on the previous day. So a very good probability that we may have some sort of retracement of this upswing that we saw over the last trading week. Just remember though that we are trading within the cloud, and if the market does come off, then not only will the Kijun-sen and potentially the Tenkan-sen offer support, or even the swing lows, for example, this one at 1150 and down to 1133, but anywhere through the cloud down to the bottom of it, which is at around 1117, can potentially offer support to the market too. So we do need to be aware of that. Now, if the market does trade to the upside, there still is a possibility that that can happen, although the probability is that the market will come off. But if it does, we do need to watch the high of the current candle for the potential for the market to trade up to 1179, where there's likely to be some resistance. If the market does trade through there, then it may possibly trade up to around 1200. But a Harami pattern, bearish candle, potential for the market to sell off again.